Welcome, ladies and gentlemen, to the Power is Now teleconference. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session, and instructions will follow at that time. If you should require assistance during the conference, you may press star then 0. And as a reminder, this call is being recorded. And now your host of the Power is Now, Eric Frazier. Sir, you may begin.
Good morning, and welcome to the Power is Now teleconference. It's another incredible, gorgeous day in Southern California. I tell you, I love living in California. It's a fantastic day to talk about the tax bills. 3 very important tax bills in 2010 passed by Congress, President Obama's 3 new tax bills, and how they will affect you in 2011. John Gonzalez is on the line with us today, and he's going to talk about that. For those of you who are brand new to the Power is Now teleconference, I want to welcome you to the teleconference. My name is Eric Frazier, and I'm the host of the Power is Now teleconference, and today is our 71st teleconference. It's amazing how fast time goes by. I'm also the president of the Orange County Association of Real Estate Brokers, a chapter of the National Association of Real Estate Brokers. And please go to our website at OCAREB, as in boy.org, and check out what's happening locally here in Orange County. And you can go to the national website as well at NAREB, as in boy.com, NAREB.com, and learn more about the national organization. I'm also the branch manager for Wells Fargo Home Mortgage right here in North Orange County. Please consider using one of our dynamic team members on your next transaction. I tell you, I support some incredible people who do a fantastic job every day for real estate professionals. And you can contact any member of the team at the team website. It is the Do It Now Team, thedoitnowteam.com. And we call ourselves the Do It Now Team because we work with a sense of urgency. In addition to that, we have a close-on-time guarantee, and this is something that no other lender offers, and that is that Wells Fargo will pay your borrower's first month's principal and interest payment. In fact, we actually write the check to the borrower if we fail to close a transaction on or before the close of escrow date. And, of course, it has to be something that we created, a problem that we are the problem as for the transaction not closing on time. The client, the borrower, must have complied with all the requests, provided us everything in advance. And typically we provide this guarantee, on the close-on-time guarantee, we provide it at the time of the pre-approval. So we know what we're working with from day one. And we're very happy to offer this added level of protection and insurance for the borrower because we want them to know we're absolutely committed to closing the transaction on time. So please go to our website, thedoitnowteam.com. And if you're listening outside of Orange County, go to wellsfargo.com/mortgage and get in contact with a local mortgage consultant. The phrase, the power is now, suggests that we maximize our potential for success in business and life when we act on information and opportunities now. The present is our future because the future is only a reflection of our past decisions to act now. And that's what we try to do every single week, is provide you information in which you can act now on. I am very happy to have John Gonzalez on the line today. Last week we had Stephen Weiss, and he's a senior vice president with the Foreclosure response team. And hopefully you've had an opportunity to contact Stephen since our teleconference last week. He talked about effective short sale management and how important centralizing the process is, and focusing on core competencies, having a team approach to addressing the challenges that come up with managing foreclosures or particularly short sales. So please reach out to Stephen Weiss with the Foreclosure response team, and I'm happy to really endorse them, and I really wish that you would give them a call and see how they can help you grow your business. Today on the call is John Gonzalez, and he is a CPA right here in Orange County in Irvine. He owns a full-service accounting, tax, and consulting firm specializing in small business, entrepreneurs, and real estate professionals. In fact, John is a real estate professional. He holds a broker's license, and he's an investor. He is involved in helping clients structure profitable and growth-centered companies. John has practiced in the public accounting profession since 1992. He is the founder of Gonzalez EPA, and his expertise includes individual, corporate, multi-state taxation, and consolidated returns. Additionally, John specializes in business and tax strategy planning for small, entrepreneurial, and emerging businesses. Prior to Gonzalez CPA, John was with various national and local public accounting firms. John is a certified public accountant with the California Board of Accountancy. He's also a member of both the American Institute of Certified Accountants and the California Society of Certified Accountants. John is a graduate from California State Long Beach with a Bachelor's of Science in Administration and Accounting, and he has a Master in Science and Taxation from Golden State University. John, thank you for being on The Power Is Now today.
Eric, thank you for having me. It's always a pleasure to talk about tax, obviously, since I am more of a tax techie.
A tax techie you are, for sure. In fact, John, you have been on the program now, I think, 3 or 4 times. In fact, you were one of the very first guests on The Power Is Now. And so we really appreciate you coming to us from time to time and bringing us up to date as to what's happening with taxation. All of us are looking for ways to save money in taxes, and to prevent ourselves from getting audited and just creating unnecessary problems. And I know that you're going to address some of that. And one of the talking points here about tips to organizing for 2010 and 5 tax strategies and planning tips for 2011. So I want to encourage everybody to stay in for this call. And if, in fact, you can't, the call is being recorded and will be available on Facebook, facebook.com/PowerIsNow, facebook.com/PowerIsNow. And in fact, please go to Facebook, and if you are a participant and listening to this call, and you've been doing so for a while, please link up with me at LinkedIn and Facebook and Twitter. I'm all over the place. Active Ring. Let's communicate and leverage the social media. So, John, President Obama signed 3 new tax bills in 2010. Give us the overview of what's really happening with taxation.
Well, see, the overview, because of our economy, the president and Congress is trying to stimulate the economy here, and making sure that there are more dollars for people to spend. That's the bottom line. Normally in other economies, the government is looking for savings. But in our situation here, we're looking for spending here. That's what's supposed to get our economy back into ship-shop tape.
Wow. So in the past, they're looking to take money from us, and now this time they're trying to give us money? Is that basically what you're saying?
That's exactly what it is. It's sort of like giving your kids a couple of dollars and say, hey, go spend it wherever you want. That's exactly what's going on. And there are just so much information in all of these tax acts. Unfortunately, because there is so much information, there are ways for what they call pork to be included in all of these acts. And those are just little things that are thrown in there by Congress at the very last minute, where really no one sees. I'll talk to you about a few of those as well.
So how many changes were there in 2010?
Well, gosh, there was a total of 16 acts that were put in front of Congress that were actually passed.
Okay.
Some of them have an implication on us as business owners and individuals. Some of them have more of an impact on the general population.
Okay.
So I'm talking about the 3 here that are most important to us as business owners and individuals.
Okay. Well, let's jump in.
Great. Well, let me go over just the 3 acts that I'm talking about here. Number 1 is this is a mouthful, the Tax Relief, Unemployment Insurance, Reauthorization, and Job Creation Act. I'm also going to talk about the Health Care Reform Act, and then finally the Small Business Jobs Tax Relief Act of 2010.
Now, is there an acronym for that first one, John? That's a pretty long title.
There is not. There is an acronym for the Hire Credit, which is the Hire Incentives to Restore Employment Act.
Okay.
But yeah, I guess no one had fun with the first one, I guess. So the first one here is very plain and simple. It extends the tax deductions, credits, and tax rates that George Bush had put into service in 2001 to 2003.
Okay.
Now, back when we had a previous president, we had some pretty high tax rates. And just to give you an idea, our tax rates before were anywhere between 15% and 39.6%. When we couple it in together with California, we were almost at 50% tax rate. Can you imagine that?
Wow. At what income level would be at that tax rate? What would
Good question. For an individual, for someone who's single, we would get up there at $379,000.
Okay. Wow.
For a married filing couple, guess what? The same thing, $379,000.
Wow. So if your income as a married couple or single individual was $300,000, you're paying between federal and state 50% in taxes.
Absolutely.
Wow.
So every dollar has 50 cents taken away for tax purposes.
Right.
And not even to consider other taxes that we have to deal with, sales tax, employment taxes and such. We had quite a little bit coming back to our bottom pocket there.
So this bill actually keeps the change to reduce that, or how did it work exactly?
Exactly. So we have a 2-year extension on the Bush-era tax cuts, which means that we're going to have these same tax cuts for the year 2011 and 2012. But not all of these credits that I'm about to talk to you about will extend through 2012. Some only extend through 2011.
Okay.
And that brings us to our tax rates today. Our tax rates start from 10% and go all the way to 35%.
Okay.
But a lot of people are between the 10 and the 25% bracket. But now, before you start thinking, oh gosh, 25% of all of my income is taxed at this dollar amount. Well, the way that the tax rates work is that they're incremental, meaning that the first $17,000 are taxed at the 10%.
Okay.
The next $43,000 are taxed at the 15%, and so on and so forth.
I see.
It's not the entire piece there.
I see.
So some of the things that are staying together, which we really need to talk about, are capital gains and dividends tax rates.
Okay.
Before Bush tax cut era, there were 20% on everything. Now we're down at 15%. Furthermore, this is a very important piece to think about, is if you had any capital gains stocks, sale of homes, then you would wind up paying 15% on the whole thing, except for if you were in the 10 to 15% tax brackets, you would pay 0 taxes on the income that you received from sale.
Wow.
Isn't that interesting?
That's great.
So 0 taxes altogether.
I guess, though, it's kind of you're in a rock and a hard place. You're not making that much money if you're in the 10 to 15% bracket, but you don't pay any capital gains if you sell your home.
If you sell your home and your bracket is under 15% or, 15% or under, then you have no taxes for federal.
Wow.
One of those things we were just talking about, Eric, is that we figured that $379,000 is the top amount for single and for married filing joint altogether.
Right.
This was the situation a long time ago. Now we were about to change this back to the regular dollar amounts and have a big tax dollar. This is what's called the marriage tax penalty.
Okay.
Meaning that just because you got married, you wind up having a bad tax issue. It just didn't make sense. So now this has been extended for the next 2 years, what they call a marriage relief. In other words, if you're married or single, you're still at the same situation. Put it this way, a married couple will go all the way to the higher amounts. The individual will go to the lower amounts before they actually get to the higher tax rates.
Okay.
We have things that are – I'm sorry, Eric?
Well, so I'm really not clear. So prior to this tax – this is an extension of that, or this is a new tax?
Correct. So that's where the confusion sets in a little bit, because we've had these tax cuts since 2001.
Okay.
And in 2010, these tax cuts were supposed to sunset and no longer be available for us in 2011.
Okay.
And this would have had us go back to the pre-2001 tax cuts or tax rates, which would have been extremely higher.
So you're saying prior to 2001 or around 2001, when this bill passed, there was a benefit to getting married in terms of the tax, or there was a penalty?
There was a penalty of getting married.
Okay.
So if I could convince my clients to not get married and just shack up together, that was the best tax situation.
Okay.
But now at this point, it doesn't really make a difference whether you're married or not.
I see.
But it did back then. Interesting.
Okay.
Some of those other changes that were